So even though the consumer's rock solid, Powell's plenty of reason to step on the gas pedal if he wants to. As long as that's his attitude, we can have more days like today. For example, that hideous pre-announcement from Arrow, it should have crushed tech totally. Instead, the tech cohort barely blinked because the Fed's going to cut rates, so why bother to sell? If we were fighting the Fed, I think the action, I got to tell you, it would have been very different. It's why Alphabet could rally even when billionaire investor Peter Thiel accused the company of treason and President Trump ran with it. He's going to want the Justice Department to look at it, more on that later. It's why Facebook could hang in there even though its Libra cryptocurrency proposal was skewered by pretty much the whole Senate Banking Committee today, looking very dead in the water. So what do? You need to approach the market on a case-by-case basis. Look at the banks. J.P. Morgan's clearly doing incredibly well. The stock was down at one point. Nice opportunity. Goldman Sachs seems to have gotten a lot more consistent with a lot more recurring revenue, and it's ready for a new Apple credit card. That could be gigantic. But on the other hand, Wells Fargo missed the numbers, and its stock justifiably got slammed. There's that case again for against buying banking ETFs. Buy the good, not the weak. You see semiconductor companies like Broadcom, Micron, Intel, Analog Devices, Texas Instruments, their stocks have been thriving because of the trade talks with China. They seem to be getting a lift from a strong economy. But after the Arrow news, it's all bad. No one wants to own any hardware or software, or even Microsoft. More broadly, at the end of the day, you need to understand one thing. When you have a Fed chief who's hell-bent on cutting interest rates, because of Brexit, trade talks, whatever he's using, then you should own stocks that benefit from lower rates. And as it happens, that's almost the entire group of the S&P 500, except for Wells Fargo. When you see the transports rally off of J.B. Hunt, and you see the excellent retail sales numbers, and it still doesn't deter the Fed from cutting rates, man, you got the makings of a good market. That's why you need to look for opportunities on days like today. Opportunities like, say, by IBM. Just linked the key deal with AT&T Communications. It's going to help them cement the 5G business together. I think it's enough to reason to buy well, one of many reasons why I like IBM. Hey, opportunities like Home Depot. It's pulled back today. No particular reason. A small firm didn't like it. Or here's two that just naturally pop into my head. Visa and MasterCard, both down today, even though I think both companies are set to do well after the numbers we've seen from J.P. Morgan and Citi and that overall retail number. What are they doing being down? Oh, you want irony? The two biggest negative calls of the day, CarMax and Arrow, they both finished well off their lows for the day. Arrow only down $1.25. See what that does? It tells you just how difficult it is to sink a stock when it's floating in the Great Salt Lake that is a benevolent Federal Reserve. So here's the bottom line. You simply cannot fight the Fed when it's coming up with all sorts of flotsam and jetsam reasons for why it needs to cut rates. And you can't fight the tape. No fighting of the tape when it holds up even in the face of bad news. Those are the rules. You don't like them? Ring the register. No one ever got hurt taking a profit. But I don't think this is the kind of market that's worth running from. As long as the Fed is our friend, it makes sense to buy the stocks of high-quality companies when they go down, even on days like today, when we do indeed have some palpable weakness in multiple sectors.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.